This is one of my go-to indicators. So this is how a Fibonacci works. Say you have a chart moving up where you have a trend in a certain direction. You can click on this Fibonacci retracement, click at the beginning of a trend and go all the way up to the highest point on the trend. And what you're going to see are these numerical values. Okay, starting from 1 to 0, we have 78.6, 61.8, which is in green, 50, 38.2, and 23.6. And what you'll notice is oftentimes if a trend is going to have a pull down, this 50 level is often the level it will go to and have a continuation higher. Same thing with this 61.8. This is referred to as the golden ratio. This is the ratio that can be found naturally occurring in the formation of shells, plants, trees, even your facial symmetry, all for some reason fall around this specific Fibonacci value, which oftentimes will lead the price to revert cleanly down to that level and have a continuation move up, which once again can allow us to start to structure positions around these key levels. Okay, so if we go back to our chart, we know we have an uptrend and a downtrend. So say for example, we wanted to look at this trend and see some of its important levels. We'd click at the high and then go over to the low. And then let's watch what happens to price and where it starts to respond. Okay, so as the chart moves forward, that becomes the low. Okay, price comes up, reacts cleanly off of that 61.8 value. And it just so happens that that level was the last level for a massive move to the downside. Even looking at this area right here, say we were to start from this point to there, this push down before a continuation higher was basically the last level that the price regressed down to before making a continuation up. Okay, another really cool piece of technical analysis that I like to use when I'm looking at these formations is something called a fair value gap. And you can see these all over the chart. So it's basically these big candles that are making these big pushes like here and like here, or like here and like here. And I can actually turn an indicator on called the Lux Algo Fair Value Gap indicator, and that's going to pull them up on my chart automatically. But the reason that I look for them is because you can see oftentimes price will end up coming back into these and making big moves back in. Fair value gap right in here, price moves up, has a response off of it. Fair value gap produced here, price pulls back down, even though it wicked through this one like crazy, comes back down to the middle of that, has a continuation up. Okay, this one's not showing, but here price comes into the midpoint, has a continuation up. Okay, and the way that we can identify these on a chart is basically we need 1, 2, 3 candles either in the up direction or the down direction where the first wick and the third wick do not overlap on the second candle. So you'll see this is the high of the first candle and this is the low of the third candle. In between here is going to be a bullish fair value gap. And right here we have 1, 2, 3 candles, first wick, third wick, price doesn't overlap right here, creating a bearish or a fair value gap that is likely to continue moving to the downside. It's things like these that I'm using when I'm doing analysis to be able to find key areas that even though we don't know for sure it's going to move in our direction, that we're able to at least start off in an area where we can keep our risk contained, let the market move in our direction, and hopefully make more money than we're risking. Okay, and of course this is just scratching the surface. I talk about all of this on my channel a lot more, but as far as a foundation, these are the primary things that I'm using. Like I said, you can watch the technical analysis video at the end of this video to dive more deeply into how I use these things specifically. Okay, so now that we understand some of the analysis and tools that go into actually trading, let's talk about how to actually put this into a strategy that you can start practicing and trading for yourself.